You hear it on the news all the time, right? The market is up, the market is down. But what in the world is the market? Well, it's not a place, it's a number. And today, we're going to pull back the curtain and show you exactly what that number, a stock index, really is.
Okay, so just think about it for a second. How can you possibly get a read on the state of the market? You've got literally hundreds of different companies, and every single day, some are winning, some are losing. How do you boil all of that down to one simple answer? It seems kind of impossible, doesn't it?
And just to give you an idea of the scale we're talking about, here in Israel, the Tel Aviv Stock Exchange has around 500 companies trading on it. Can you imagine trying to follow every single one of them just to figure out if it was a good day or a bad day? Yeah, no way. You'd go crazy. We need a simpler way.
So here's how we're going to tackle this. First, we'll get the big picture of the stock market. Then we'll define exactly what an index is. We're going to zero in on Israel's famous TA35, then zoom out to the major world indices, and finally, and this is the important part, we'll talk about why any of this actually matters.
All right, let's dive right in. To really get what's going on, you can't get lost looking at all the individual trees. You've got to see the whole forest.
And that's really the problem we're trying to solve. With all this chaos and information, what we really need is a simple snapshot. Just one picture that tells us the general mood and direction of the market. And that snapshot, well, that's exactly what a stock index is for. So what is this thing, this index? You can think of it as a hand-picked team of companies that represents the entire market. But how do we decide who gets to be on the team? Well, it all comes down to one really important idea.
And that big idea is called market capitalization, or what everyone calls market cap. Now, it sounds super technical, but I promise it's incredibly simple. It's just the total price tag of a company. All you do is take the price of a single share and multiply it by how many shares exist. That's it. The result tells you how big the company is.
So, how do you use market cap to build an index? It's basically a three-step recipe. Step 1, you calculate the market cap for every single company. Step 2, you line them all up, from the biggest to the smallest. And step 3, you just skim off the top. You pick the top group. Maybe it's the 35 biggest, maybe it's the 100 biggest. It's that straightforward.
Okay, theory time is over. Let's see how this actually works in the real world by looking at the most well-known index in Israel, the one you're always hearing about, the Tel Aviv 35.
So the TA35 is exactly what it sounds like. It's the 35 companies with the highest market cap on the Tel Aviv exchange. These are the absolute heavyweights. We're talking about giants like Teva, Nice, and all the big banks. And this list isn't static. It gets a refresh every 6 months, so it's always the 35 most valuable players.
And the TA35 isn't alone. It's part of a whole family of indices. You've got the TA125, which tracks, you guessed it, the top 125 companies. And then there's the TA90, which covers the next 90 companies right after that top group. It's all just different ways of slicing up the market to get a different view.
Now, this whole concept is the standard playbook for markets everywhere. It's not just an Israeli thing. So let's zoom out and take a quick trip around the globe to meet the indices that really move the needle on a global scale.
I think this table does a great job of showing how each index has its own personality. You've got the TA35, our local champion. Then there's the S&P 500, which is the big one. It's the broad benchmark for the entire U.S. economy. The NASDAQ 100, that's for the tech crowd, tracking the biggest innovators. And the Dow Jones, well, that's like an old-school exclusive club for 30 of America's most legendary industrial titans. Let's just focus on those last two for a second, because they're the most famous in America. The S&P 500 gives you that really wide, panoramic view with 500 companies. The Dow, on the other hand, is much more selective. It's a curated, hand-picked list of 30 massive, influential companies. Think Apple, Coca-Cola, companies that are seen as the pulse of American industry. Okay, so we know what they are, we know how they're made, but who cares? Why does this single number get so much attention every single day? This, right here, is the key to everything. And this is where it gets wild. Just look at this. Those 35 companies in the TA35, they account for about 65% of the entire value of the whole stock exchange. Let that sink in for a minute. Just 35 companies make up almost 2/3 of the market's worth. That's incredible. It means that as they go, so goes the market.
And that right there is why an index is so much more than a list of companies. It's a powerful economic indicator. When the TA35 goes up, it means the biggest, most influential businesses in the entire country are doing well, on average. It becomes a proxy for the health and the confidence of the whole economy, which affects everything from your pension to whether companies are hiring.
So if you remember one thing, let it be this. Following an index is like reading the headline of the entire economic story for that day. It's the ultimate shortcut to understanding a massive, complicated system with just a single glance.
So I'll leave you with this question. The next time you're listening to the news and you hear that the index is up a point or down a point, what is that number really going to tell you? Because now you know it's not just random. It's the collective story of the market's biggest players, and a powerful clue about where the whole economy might be headed.